Stocks extended gains on Thursday with the S&P 500 at a 2.5-month high as technology sector earnings continued to do well despite weak economic data. Data released today showed weaker than expected readings on U.S. manufacturing, housing, and the labor markets. Home resales fell in June, but the median sales price was higher than a year earlier as fewer people sold their homes, giving mixed signals for the U.S.'s housing market recovery. The National Association of Realtors reported that existing home sales slipped at its slowest pace in 8 months, while the median nationwide price for a home resale rose near $189,000 in June, up 7.9% from a year earlier.
Data show that home resales fell in June, yet the median sales price is higher than a year ago. What do you think is more important when analyzing that data, that home resales are down or that median sales price is up?
Definitely that home resales are down. What this country really needs is for the value of the average American's home to get back to the previous levels that it had, and I think that the reason the median sale has gone higher has been a result of new home sales, new construction, and the new home sale construction only goes to undermine the price of the existing home sales. So if this economy is going to recover, we need to have the average American's home price return to the previous levels that they were at, and new home sales aren't going to help that.
Corporate earnings have been beating analysts' expectations, especially in the technology sector. Recent lackluster data and the ongoing debt crisis in Europe have had a limited impact on the market as investors increasingly expect the Federal Reserve to step up stimulus efforts.
Investors have been worried that the Eurozone debt crisis would end up hurting corporate profits in the U.S., yet a lot of the reports released this week have actually beat expectations. Why do you think that is?
Well, I think that it's a matter of the fact that over the past 4 or 5 years, the economy has been tough. I mean, let's face it, we've been going through some very challenging times, and companies have been forced to either change their ways, to adapt, or fail. And obviously, they've changed their ways, tightened their belt, so to speak, and they've produced on those numbers. I think another factor is the fact that, you can never underestimate the American consumer, and at the heart of everything, that is what drives our economy. That's what drives corporate earnings, and today's media might be discounting the American consumer.
The lower house of Germany's parliament on Thursday approved Berlin's contribution to a Eurozone-wide aid package for Spain's banking sector. The outcome of the vote had been largely a foregone conclusion after the main opposition parties had signaled they would back the package.
German parliamentarians met today to vote on the Spanish bailout, and German Chancellor Angela Merkel is optimistic about it happening. What are you expecting to see now that they're going to agree on that?
Well, while Germany seems ready to take the lion's share of the financial burden to get the rest of Europe back on track, I don't really think it's a matter of who's willing to take the burden, the financial burden on their back. The question has to be, are the troubled economies, the troubled governments willing to do what it takes necessary to take the right steps and get back on track? So while Germany appears ready to step in and do what it takes, are the people and the governments of these troubled countries willing to do what it takes to get back on track? So sure, are Germany's comments going to improve global sentiment? Definitely, but it really comes down to these individual governments and people to get back on track themselves.
Earnings reports set to be released tomorrow include Schlumberger, Baker Hughes, and American Electric Power Company. Jessica Minton, IB Times TV.